Hey, good afternoon, everybody, and thanks for being here. My name's Mike, and I'm with Insider Secrets. I couldn't have said it any better than Kristen just said it. You know what? Our intention at My Core and Secrets is to create and help our clients build a future. Build a future through real estate investing, through different techniques, different strategies, and I'm so big on education and so big on strategy. Listen, if I can help you create short-term cash flow and long-term wealth, and I can bring that to you through education platforms with different people, you know what? It's just like you see the sign behind me, the summit's coming up. And we are going to be filled with 20 different speakers and panels and VIP breakout sessions and rooms. And you know what? If you haven't registered, you still have time. And I would register. This 3-day event is going to be action-packed and just full of education and all kinds of things. Actually, our guest today will be a guest that's going to be on our summit also. And I'm excited about our guest today. Let me start to introduce my friend and longtime real estate investment attorney, entrepreneur, and community activist, Dugan Kelley. Dugan has offices in California, in Santa Barbara, and in Dallas, Texas. Both a couple of my favorite places. Dugan is one of the co-founders of Kelley Clark PC, and their mission is to deliver big firm expertise and experience to the local community. Dugan Kelley currently serves clients throughout the United States. Its principal offices, like I said, are in Texas and Santa Barbara. Dugan chairs the firm Securities and real estate practice groups, assisting clients in all phases of multifamily, commercial, and residential acquisitions and sales. Mr. Kelley's real estate experience includes transitional services for his clients ranging from commercial loans, closings, real estate, private equity, capital raises, joint venture agreements, commercial leasing, business acquisitions, and general commercial real estate services. Boy, that's a wide range of services that they offer. And, here's what I know is he's very sharp on each one of those areas. In the last couple of years, he's handled a combined transactions of over $3 billion. And throughout Mr. Kelley's 20 years of experience, he's also tried numerous cases in the state and federal courts, administrative courts, and arbitration. With over $70 million in verdicts, settlements, and workouts, and millions in settlements prior to trial, Mr. Kelley understands that there isn't one solution fits all for every case. Mr. Kelley lives with his wife, Michelle, and their 3 boys in Dallas, Texas. And let me get him to introduce himself. This afternoon, we're going to get him to talk about all his skills and his skill set and how we do that. And Dugan, you know what? Why don't you say hi to our listeners, and I'll just shut up here for a minute. But here's what I want you to really do is just tell our listeners in one word what best describes you and your investment philosophy.
Hard work. So I'm a big believer, Mike, in hard work. That's at the core. That's the core principle that my dad instilled in me from an early age, is that I might not be the most talented, I might not be the smartest, I might not be the wealthiest, but I have a philosophy that nobody's going to outwork me. And that has served myself and my team and obviously my clients well over the last 20 years. So thank you for having me on your show. It's an honor to be here with you.
Oh, it's an honor to have you here. What's interesting is, over the last 25 or 30 shows, I have to tell you, nobody said hard work. And I'm such a proponent of work ethic, right? Because, hey, how many Rudies are out there, right?
Yeah. So, yeah, there's no doubt about it. It's you can make up for a lot of. I'll take somebody that has an excellent work ethic over somebody that is naturally gifted 10 times out of 10, because a lot of the areas in which people are naturally gifted, you can learn, you can be taught. But if somebody just lacks that killer instinct or the instinct to really work hard until the job is done right, you can't teach that a lot of times. That's a problem.
Yeah, that's so true. So listen, I gave a pretty big introduction about you and everything that you do and Kelley Clark does. And what I'd like to know is, talk about your background a little bit.
Okay.
How did you get to where you are? You grew up the son of a preacher, and
That's right. Yeah. So I was born and raised in Montana. I still call Montana my home. So when I grew up, my dad was a pastor. He was a businessman, an entrepreneur, and also a lawyer. So I didn't know growing up that that most people thought that the law and being a pastor couldn't happily coexist with one another. So it was very common in my household to talk about politics and law and religion all in the same at the same dinner table. And I had a great upbringing. My dad was very ambitious, and he wanted to see exactly what type of work ethic I had instilled in me from a very early age. And so he kind of provided opportunities for me to see how fast I could excel through school. And so I graduated from high school and college while I was still in my teens. And I finished law school very young. I was just 20 at the time or 21 just turned 21 at the time when I graduated from law school. So I've been practicing for 20 years, but that's, I think, in large tribute to my father, who wanted to see exactly, for his firstborn son, to see exactly how fast I could run. So he let me run about as fast as I could run, and that's in part probably why I think hard work is such a key component of my DNA and who I am as a person.
Nice, interesting. What got you intrigued in real estate? What did you do before you became a real estate attorney, and what got you intrigued to go in that direction?
So when I graduated from law school, I thought that I was going to spend most of my career in the courtroom. So for most lawyers, when you go to law school, you think to yourself, the only types of lawyers that you really know about are the ones that you see on the movies and TV, right? And so yeah, that's right. The sizzle, the criminal lawyer, right? Or the civil courtroom lawyer, the one that's making the speech in front of the jury or the judge or whatever, those impassioned things. So I have a little bit of that in me, a little bit of the carnival barker, to jump up on the stump and say things, to people, and want to be persuasive and sell. And so I did that for a long time, but I shortly realized in the middle of probably my first decade of practice that litigation was really the unhappy business. Most of my clients were unhappy. They were either unhappy having to sue people, they were unhappy being sued. Even when we won a large verdict for them, they were still unhappy because of the amount that they had to pay their attorneys, or they had to pay for costs, or once they got a fancy verdict, the defendant didn't have money to pay that verdict. So many people think that if you get a verdict at trial, that there's just this automatic magical exchange of money from the party who's said you're liable, you got to pay this person this amount of money. And it doesn't work like that. It's almost like another lawsuit after you win. And so my clients were not happy. In 2007, 2008, a lot of my clients were in the construction industry. They were involved in commercial real estate. They were either developers themselves, they were syndicators, people that were raising private equity, but we were handling the transaction when it would fall apart, or the lender that they had was trying to enforce the personal guarantee. And when the whole financial crisis happened in 2007, 2008, everything changed. And so I had a lot of clients that had massive net worths that they became embroiled in litigation for years. And so I had a couple of really good friends of mine, clients that we went to church with, that said, you're really good at the litigation side of this, like helping creative problem solving, resolving conflict at the end of when things fall apart. Have you ever thought about starting out at the beginning, where everything is really good and people are happy and they're excited to do deals. So with your mindset of a litigator, you might be able to help people head off conflict earlier on in that process. And the more I thought about it, the more I thought that it was a natural fit for the gifts that I had and the gifts of our team. And so we opened up a real estate and securities practice. And so my practice slowly over the last 10 years has transitioned from almost entirely litigation based to what my personal practice is now almost entirely transactional, formation, securities, real estate, putting the deal together based. And so I realized that my clients are much happier at this stage when they're putting the deal together than they are at the end if something actually goes wrong. So that's how I got into real estate and the securities practice group.
Nice. So tell our listeners, not just me, but a little bit about Kelley Clark and the size of the firm. And,
Okay.
Seems like you do a lot. And do you have a specific focus, or do you have something personally that you're more passionate about than something else?
Yeah, so we're a small firm. We're a small firm by design. We're a small boutique firm with a national footprint. We have actual physical offices. We're not working out of our houses or our cars or anything like that. We have physical places. So if you want to come see us, you can come see us in Santa Barbara or the Dallas, Texas area. But by design, I work for big firms, and I realized that big firms come with big costs, and those big costs have to be paid by someone. So I saw that big firms tended to charge higher rates for clients. And so what the clients often don't realize is that if you're going to hire that $1,000 an hour lawyer, which I've done before, you're paying for a lot of that $1,000 is going for the lights and all of the overhead associated with the hundreds of lawyers or staff that work at that particular location. So my philosophy is a little bit different. We charge, at least in the real estate or securities practice, we try to do everything on a flat fee. So we try to level set the client's expectations at the front part of it and keep costs down. So as a result, we have a very streamlined, all of our lawyers are very streamlined. There's probably 6 or 7 of us that are active throughout the United States in helping clients. We do a lot of, we're a full service law firm, but we don't do every aspect of the law. But we try to provide essentially a one-stop shop for clients so that regardless of if your issue is transactional, meaning you want to start a company, or you're thinking about starting a company, or you want to figure out what is this thing called syndication? How do I sell a security? Or if you've got problems that have naturally come up in your business or your personal life that require somebody to look at it from a litigation mindset. We provide those types of services for our clients. But ultimately, for us, we kind of view the practice of law as a ministry. We really think of it more in terms of like how we can really serve our clients, and whether that service means that we are representing you as lawyers, or whether the reason that you came to us is just so that we could get you to somebody that is more qualified to handle your particular matter or transaction. That's our philosophy in the practice of law.
I hope my listeners are picking up on this, Dugan, that there's something different than just you being just an attorney, that there's a service that you like to extend and, really heartfelt, coming from your heart because you really care.
Oh, I appreciate that, Mike.
And I hope my listeners are picking up on that, because over the years, I've been doing this a long time and a lot. And with a number of different types of people, and you can always tell when that just kind of comes through. So thank you for that.
Thank you.
What, so, you know, what's the best way that in current environment that we're in? So let me rephrase how I'm going to say that. In the current environment that we're currently in, and here we are, Q3 of 2020, right? The world is kind of half shut down, half open. Nobody really knows what tomorrow's going to bring or what's happening. What do you see for the real estate investment world?
I'm still very, very bullish on commercial real estate. I love real estate. I think it is an amazing opportunity to help individuals and families build wealth for the future and for future generations. And I don't just say that as largely a service provider, meaning we're kind of a tool in the owner's tool belt, so to speak. But my family personally, we're investors. We have syndicated small commercial buildings and apartment buildings and single family residential homes that we've rented out. So it literally has provided sometimes the only money that my parents, as practicing ministers, right? That's not a high paying job. They were not in it for the money. So the fact that there were opportunities for us as a family to essentially invest in commercial real estate, which then would generate passive streams of income for my family to allow my dad and my mom to pursue their passion, to share the gospel across the world. That is key. So whether your passion is something that doesn't generate a lot of money, or what have you, investing in real estate and getting along with building a team that will help you invest in real estate that will hopefully generate passive streams of income for not only for your future, but also for your family's future is, I think it lights out, is way better, in my opinion, than investing in the stock market or other types of equities that are out there now for the investor. They're not building any more of it. Land is finite. So it is a unique commodity that even in the practice of law, all courts, judges, everybody, they recognize every piece of land is especially unique. And so I think I talk to young people that are just getting started, and I wish that I had started even earlier doing this, but investing in commercial real estate is, I think, key for people's financial future, and to be able to hopefully give them the freedom to do what their heart is designed to do, and that is to pursue their passion.
Yeah, that's awesome. You know, I like what you say about land being unique, right? So I have a friend, and we've been friends for many, many years, but his father used to be the largest condominium developer back in the 90s when that condominium boom was going on in the Chicago market. And he said something to me one day that was very interesting. God's not making any more land, and buy what you can buy and hold on to it. And he owned a ton of land, but he built hundreds and hundreds of buildings, thousands of units. I always looked at that condominium craze as like the gold rush back in the 1800s, right?
Yep.
Because that went on for a while in a lot of markets. So it just was always interesting, you know, his philosophy around real estate like that. He was just one of those guys that was influential in my life over the years and caused me to go into real estate. At that time, I happened to be in the construction business. And that was one of those deciding factors that said, hey, go this way, you know? So,
yeah.
So your firm you could work in any state, any of the 50 states?
Yeah. So the practice of securities is a national practice. So securities law is governed by the Securities and Exchange Commission, which is at the top level government. So all of the states essentially use the same law. So when we're syndicating in Georgia, It's the same as if we're syndicating in Tennessee or Florida or California or Arizona. And so, yeah, we have lots of clients that are hunting, buying and selling real estate all around the country in the hot kind of multifamily markets.
Nice, nice. So I want you to talk about two buckets. Okay, so we
Okay.
have a brand new investor who probably
Okay.
doesn't know a lot about syndicating, probably doesn't need a securities attorney right now. So how does your firm help him? But yet the other bucket is that investor who's got his feet wet, who's done some deals, maybe done some big deals, and is looking to go in that realm now, in that direction. And so can you talk about both buckets and how
Sure.
you best can serve both of those?
Sure. So the first time investors or the people that are just getting started, I love you. I think it is amazing. The passion that I see in people's eyes when they talk about, hey, this is our first deal, or we've been historically playing with our own money, or we're fix and flipping in the single family residential, we're thinking about getting into the multifamily. It gives me an awesome opportunity to talk to them about the way that banks value these different assets. So when the light starts to come on and you start to say, hey, the bank values multifamily, above 4 units and larger, much different than the way that they value single family residential. And more importantly, they underwrite it differently, meaning the difference between recourse debt and non-recourse debt. As somebody who have lived through 2007 and 2008 with construction companies that I represented, developers that I represented, people that had signed personal guarantees, that is a very key thing for people to think about from the standpoint of, if worst case scenario, the economy shuts down or we go through another major bubble burst in the real estate market, people that have been playing in the multifamily non-recourse space, meaning the bank doesn't have the ability to go after your personal assets. That is a huge key distinction between those two groups. So being able to provide that type of education and encouragement to people that are just starting out is one of the things that we do for a lot of first-time investors or people that haven't historically done a lot of deals, either in the multifamily space or they're just thinking about getting in the multifamily space. But there's always a transactional side of buying and selling, even if you're not syndicating. And when we say syndication, all we really mean is that we need to raise the money necessary to achieve the equity that the title company or that the bank is going to expect us to show up at the closing table with. So for most of us, if you've owned your own home, you were playing with your own money. The bank said, hey, we'll give you a loan, but you're going to have to pay us a down payment of 3% or 5%, or on a commercial side or a conventional loan, 20%. So most of us, we used our own money, right? Or one of our family gave us that money to use for our first acquisition. In the multifamily syndication space, it's no different. The only difference is that the down payment is not just $3,000 or $5,000 or maybe $20,000. It's potentially millions of dollars or hundreds of thousands of dollars. And most of us don't have that type of money just laying around. It's not in our safe. It's not in our bank account. So how do we figure out how to do that? So for people that are just getting started, and it's amazing to me, and I don't want to take it for granted that a lot of people still haven't heard about syndication, or they don't fully understand it. And all we're really talking about is essentially being able to raise that necessary down payment from passive investors, and you're going to act as a steward for their resources, for their money, to give them returns on that money, but they will provide that capital necessary for you to get that loan. So that's what we do in large part for a lot of our first time people. And even if they're not syndicating, I often get texted or called or emailed saying, hey, I just got an LOI accepted on our next house that we're going to rehab or we're going to fix and flip. Can you help us through that closing process? So we'll do that for people as well. For the seasoned investor, a lot of them already know kind of the basic mechanics of syndication and everything, and they want to jump forward for essentially getting the offering started very early on. Maybe because of the size of the acquisition, they're hunting even bigger game. So they're in the $30 to $50 million range for their acquisitions. So they're having to raise large amounts of money in a very compressed time frame. So remember, most people on a real estate deal, the seller is not going to wait around for months and months and months until we actually are prepared to close. Most of those purchase and sale agreements or those buy-sell agreements have a very shortened time frame. So you got to be able to close on your acquisition inside of 30, 60 days. Sometimes you may have a 90-day, but that's a very short and compressed time frame for a lot of our clients, especially when you're trying to raise, millions and millions of dollars. So it doesn't matter whether this is your first time and all you're buying is a house right next door to rent out to hopefully generate passive streams of income, or you've done this 100 times and you're trying to raise millions of dollars. Kind of the steps of the road to ownership are very similar for both sets of those groups. And so we try to help them navigate that kind of road to ownership from LOI to the closing table.
That's interesting because I teach my investors that if you can close 2 units, closing 200 is not much more difficult. The processes are all the same. And so that's why the people I coach, I teach them how to get invested in small multifamily, 2 to 4 units, and then let's graduate from there into that mid-range, into the larger stuff. And you'd be surprised at people that can grow in that direction, and all of a sudden they're raising millions of dollars and they're syndicating deals. And, so it's interesting. You talked about, you mentioned something that made me think about OPM, other people's money, and years and years ago, there was a trainer his name was Robert Allen. And Robert Allen, his big thing was other people's money, buy real estate, no money down, use other people's money. But the interesting thing about that and why real estate is so attractive is you're using other people's money to build your wealth because they're renting from you, they're living in your unit, they're paying your mortgage payment, whether it's a single family home or it's a 500-unit apartment complex. It's the same philosophy. Right. And we can grow as investors. And I think one of the things that you do, your firm does, it sounds like, and I do, is we teach people and walk with them through those, what could maybe be perceived as a struggle or a trial from time to time, and how to make things a little bit easier. So,
amen. That's right.
I think passive investing is something that is, it's gained some speed since the securities laws changed a few years back, because it's louder now. I think a lot of things are louder in our society with social media and the internet, and I think it's gained some speed. I actually have an ebook out on my website that's a passive investing guide that and the listeners could go download and read. It would be helpful and give some direction and guidance around that. But what are your thoughts just around passive investing versus active investing? Two sides, again, here we got 2 barrels, 2 specifically different things. What are your thoughts around those?
I think either is great. I have done both in the past personally. And so I'm not I don't tell clients that, hey, you need to be either an active investor or a passive investor. We try to really figure out what will meet the rhythm and pattern of your life, right? So if the rhythm and pattern of your life is you have a high W-2 paying job that you don't intend to quit for any time soon, then you might meet the profile of a perfect passive investor, somebody that you want to see your money grow much larger than if it were just sitting in a bank account somewhere, earning virtually nothing. You're essentially just helping the bank. You're allowing the bank to actually use your money to invest in other assets to grow the bank's own money. So when you start to explain to clients like, hey, listen, you may be a doctor, you may be the world's best expert in your field of expertise, but I've learned over 20 years that a lot of people don't understand how money works and how to make it work for them, particularly in the passive investing space. And so I encourage people, I say, listen, think about this. If you can, or your wife can, or your husband can, whoever can become an active real estate professional, you might be able to adjust your W-2 income from the depreciation benefits that you could enjoy from investing even passively in real estate. And so for doctors or lawyers or engineers or people, architects, people with maybe high W-2 paying jobs, they've never thought about the tax benefits that can come from accelerated depreciation or depreciation benefits to be able to potentially reduce their adjusted gross income. Those are key things for anybody from a passive investor standpoint. But if you're somebody that is overly ambitious and you know that you want to quit your job, you're going to have to at some point make that leap from passive investor to active investor. So the leap from passive to active is sometimes driven by the passion to be able to say, I want to quit my W-2 job. I want to do this full time. How can I do that? And that's something that syndication and other types of active investing, when you're the lead sponsor or the syndicator, or what we say often synonymous with the person that actually found the deal, underwrote the deal, meaning crunching the numbers, you're doing the due diligence, and you're going to raise the capital and the debt, get the loan in place. That's where you'll see your exponential net worth grow by leaps and bounds. And so there is a continuum of kind of a timeline for people, and they move at their own speed through that continuum. And I've had clients that they're fine with being a passive investor. They're fine with that, and that's great for them. And then I have other clients that are very ambitious and they want to get into the active investing space. So we try to find out what is really going to meet the rhythm and pattern of your particular life in order to help you.
Right. Yeah, I think it's interesting, and what's interesting is some of the people that are involved in passive investing, you'd never even think, but there's that diversification aspect. I remember when I first opened a boutique private equity firm and we started investing in apartments. I had a friend go, "Oh, you're doing that?" He goes, "I've been in a deal with Inland Real Estate, who today they're one of the largest REITs in the world, right? For 27 years. And I was like, "You're kidding. I would have never known you liked real estate," So people get involved and you don't really know. And it makes it for interesting conversations. I always say real estate is one of those topics that you can talk about at breakfast, at a cocktail party, or in line at the grocery store,
That's right. It's not controversial.
No, it's not like some other things, like maybe the next topic here.
That's right.
So where do you think, where do you see the world today as a result of the things that are going on and what we face as far as a pandemic and where do you see us headed?
So last year was a very good year for a lot of our clients. Were doing a lot of deals. I think we did over 700 million in transactions last year out of our office. This year 2020 started off great. So we were cooking along, and then February, we started to hear about this, what's going on, COVID-19, what is this thing? And then March, the official pandemic was declared. And what we saw, the biggest impact in the commercial real estate market was leverage shrinking. What I mean by banks, meaning either bridge lenders or the agency lenders, Freddie, Fannie, HUD, they essentially froze or they changed their underwriting criteria, meaning they were way more picky about what projects they were actually going to fund and what loans they were going to give to borrowers. Some of them were requiring 12 months, 18 months, 6 months of interest reserve, which means that they were requiring you as the borrower to essentially hold in their escrow account, 6 months of debt service payments, 18 months, 12 months of debt service payments. For a lot of people, especially the younger operators, that blows your pro forma, your business plan, the thing that you think that you will theoretically be able to sell to potential investors about how you will grow their money and how you'll be able to make returns for them. So for April and May, things were just kind of like shut down. They were just very clogged, I would say, in the capital markets. And now, thankfully, prayerfully, things are starting to open up a little bit. And we're seeing more on the agency side than in the bridge space, but we're seeing movement with clients being able to actually start to get their deals done. So remember, in the commercial real estate market, it really is rare when you don't need debt to make things move. Okay, right. Debt meaning loans from the banks. If you can't get loans from the banks, it's very difficult unless you're a massive family office, meaning a very rich family, which there are a lot of family offices in this country, but or institutional investors or preferred equity partners that are sitting on piles of cash. That's not what the vast majority of people that are syndicating or they're putting deals together. They need that debt. So when you can't get debt, or what we say leverage, you're not going to be able to get your deals to the closing table. So I would say that I am still very bullish on commercial real estate, and I am encouraged, very encouraged, that in the last month or so, we've seen leverage, the capital market starting to loosen up a little bit. So you're seeing more and more lenders start to realize, okay, this is not like 2007. This is not like 2008, right? Their money didn't vanish overnight, right? So instead of countrywide where you had stated income loans and you had this fictitious kind of equity, or people were way over leveraged. And so when the bubble burst, I mean, it was like, where is everybody? Is the emperor with no clothes? That's this situation. People still have money. We had a roaring economy before COVID hit us. So from my perspective, there are still opportunities for people to find deals. And even if we see a somewhat of a slowdown, because you're seeing some economists, and there's lots of differing opinions, it doesn't matter what part of the political spectrum you're on, the economists are saying potentially there might be a little bit of a slowdown in Q1 or Q2. But one of the reasons for certain asset classes, but one of the reasons why most people almost uniformly agree that multifamily is still such a great investment for people that want to buy is people don't have to work somewhere, right? They all have to live somewhere. Okay. We all have to live somewhere. We don't have to go to a place to work. So with companies loosening up their requirements for people to come into the office and maybe they can work from home, I did not, at least from my clients, thankfully, see massive either spikes in economic vacancy, meaning that their tenants right? The tenants, the people that are renting their apartment buildings, were unable to pay their rent or did not pay their rent, meaning the economic vacancy rises when people are still present, physically present at their apartment building, but they're not able to pay their rent. That increases your economic vacancy at the property. We didn't see spikes of that. And so thankfully, kind of all of the dire predictions that were going to happen as a result of the pandemic have not taken shape, at least in the commercial real estate market with respect to multifamily. So banks are still doing non-recourse debt. They're still lending, and we're starting to see more and more lenders come back to the table, which is very encouraging for me.
Yeah, I think that we might maybe somewhat have dodged a bullet. We'll see, right?
Yeah.
So
I hope so.
So let me ask you this. This has been great. What new advice or secrets would you give to a new investor right now? What strategy or thought process would you put around anything right now?
So I'm a big believer in that procrastination is one of the biggest deal killers. So people can often become, paralysis by analysis. So if you're the type of person that you're underwriting 100 deals a week and you've never invested in anything, I would be encouraging you, get off your duff and invest in something. Take that leap of faith, because there's never going to be a perfect scenario. There's never going to be a guarantee for anything. There's no guarantees, right? We all used to the old proverb, there's no guarantees except death and taxes. Well, a lot of that is true. But the reality is you'll never see the blessings or the opportunities that can potentially come from investing unless you actually do it. And so, don't make the mistake that I'm saying, rush out there and invest in some sort of quick rich scheme. There are no quick rich schemes, in my opinion.
Right.
Hard work, diligence, being astute, building your team, asking lots of questions, being a part of masterminds or a mentorship or a coaching program for many people is essential. Getting that education to learn exactly about how money works, how banks value certain things, how the mechanics are, what are the steps to getting your first deal under contract and getting through all of those things. That's essential. So if you're just starting out and you don't have the education, I would say reach out to people like Mike that are actually have the wealth of knowledge to be able to get inside and be mentored by people that have done it, that have decades of experience. That is key for your long-term financial future. And once you have that education, implement it. Otherwise, what are you doing? What's the point of this whole thing? If you're not actually going to take that step of faith, right? Just take that step of faith, you will never be able to be blessed. That's the reality. So yes, your deal may fail. That's a possibility in any potential deal. But I've learned more about the times that I failed in my life than the times that I've been riding high. So you're going to learn more from times where you struggle or where you're going through times of suffering, or you're trying to figure out exactly what it is and why it's happening to you. Those are the times where your knowledge base is going to grow exponentially, in my opinion, for not only yourself, but also for your family and for your investors and for other people that are in your life that you're called to steward. So I think that's key. Don't procrastinate, educate yourself. Those two key components are essential.
So I think you said three really good things in there. First, you went right back to hard work, which was your word you opened up with today.
Yeah.
Education. I'm such a proponent of education. Thanks for the plug. I think people should call me, get some coaching, and then let us help you execute, right? And those are the important things. Dugan, I want to thank you so much. This has been great today. How do my listeners get in touch with you if they want to talk to you about real estate, whether they're buying their first deal or whether they're syndicating something? What's the best way?
Sure. We make it very easy for you to get in touch with us. We offer a free consultation because we want to make sure that we can actually deliver added value for you, for your families, for your project. If we can't, we're gonna refer you to somebody else that can actually help you. So we want to help you. You can reach us through our telephone number is 972-253-4440. You can Google my name. Thankfully, I've got a very unique name. There's not too many other Dugans out there that are practicing law in Texas or in Santa Barbara. So you should be able to find me. We're at kellyclark.com, or you can email me at Dugan, that's my first name, Dugan, at kellyclark.com.
Nice. Thank you. Well, I want to thank everybody for listening in today. I hope that this show has been helpful and kind of given you some knowledge and spurred you on a little bit. So remember, we're here every Tuesday. If you are looking for some help, for some guidance, two things. Remember, I mentioned the passive investing guide on my website. Go download that for yourself, read through that, see if that's something that may interest you, and reach out to Dugan. He can maybe help you around that. And I look forward to anybody who has any coaching needs or needs some help, and give us a call. We'll spend some time with you and see if we can't get you some guidance and direction. Want to say goodbye, Dugan?
Thanks, everybody. Be well. Be safe.
Thanks for being here today. Good luck, everybody.